Mark Newton of Fundstrat joins the show now. He's also a CMT, and you know we love getting into the technicals and seeing the charts. Thanks a lot for being on the show today.
My pleasure. It's great to be here. Thanks.
So talk to you about what you're seeing in the markets, and how do you position yourself and kind of people you talk to about what to expect for the seasonality element of September markets?
Well, look, September got up with a bang. I mean, stocks and bonds were both lower. We heard comments from the ECB that they were reluctant to consider cutting rates further. So we saw a massive uptick in rates across the globe, and the UK gilt yields are up at the highest since 1998. So U.S. yields are in much better shape despite all the concerns about tariffs. We're actually pretty subdued. I mean, the yields are still down about 30 basis points just in the last couple months. So, you know, we are still in a rally time for treasuries, in my view, and equities haven't shown sufficient deterioration to think that we're really starting to show any sort of larger sell-off. So, look, the key thing is this. Sentiment remains very subdued, to say the least. People are outright bearish. Difficult after a 33% rally we've seen in the last 20 weeks that people are still on the sidelines. If anything, that provides a solid backdrop given a dovish Fed, the fact that earnings have been resilient, you know, a pretty decent economy to think that markets still can push higher given all this negativity.
Yeah, what do you see in terms of the kind of the frothy valuation conversation? You hear the bears say, well, if you look at forward PE multiples, you look at how the big mega growth, the big tech stocks that are so consolidated, look at where they're traded relative to forward earnings, maybe some concerns there. How do you approach that side of the bear argument?
Yeah, I really try to exclude all fundamentals if at all possible. Look, it's always tough using an intrinsic value and saying, well, it's above it, so now it's negative and we need stocks to sell off. That never works as easy as plain. You want to use a combination of technicals and fundamentals. Stocks like Palantir, they got up, rose so quickly in the last year, they had a monthly RSI rating of 95, so incredible. So look, we have seen some deterioration in some parts of software. There has been some bifurcation in technology. Tech hardware giants like Apple up 10% the last month, one of the best parts of technology, whereas software has been down pretty sharply. So that is one point that I would say investors need to pay attention to, is when a leading group like tech starts to waver ever so slowly, that could bring about an eventual pullback. I don't think it started today. Market should rally back to highs. I am more worried as we get to October. The next 2 months, seasonally speaking, are some of the worst and more volatile of the year. You have to be prepared for that. Right now, technicals haven't given you any reason to want to fight this tape.
Yeah, you mentioned RSI, Relative Strength Index, and I always want people to watch the show and say, I learned a little something I didn't previously know. What are some of the other key technical indicators you most closely follow, even if you look at a broader chart of SPX, for someone to become a more informed technical investor?
For those that do not use technicals at all, I would say having a weekly MACD, MACD indicator up on the top in front of your view at all times is important. So that's moving average convergence divergence. It basically is two different moving averages lagged by a slight amount. So when you see crossovers and MACD remains bullish, it really remains proper to stick with the tape and not try to fight trends. And so look, I think trend following, watching for stocks that are breaking out to new high territory, be it daily, weekly, monthly, and or breaking down, much more important than saying, well, MACD or RSI or stochastics is doing this. You want to look at broader trends in what they're doing. Look at the correlation between equities, treasuries, the dollar. Right now, I mean, the dollar and rates arguably have started to turn down, and that's bullish for risk assets. So that makes me a little more constructive over the next week.
Yeah, we'll certainly see what the rest of the week and the rest of the month has in store despite the seasonality pressures. The VIX back above 18 for the first time in a while today. But we'll have to have you back, Mark Newton.
So one final note, if I can. Look at what gold is doing, being above 3,500, a breakout back to new all-time highs in the precious metals at a time when real rates are coming down. People have concerns about fiscal uncertainty. Precious metals are one of the best areas to be if you don't want to own U.S. stocks. So look at the metals.
There we go. Let this man cook. The great Mark Newton. Great to have you here.
Thank you very much. Great to be here.
Of course.